There was a time years ago when the only people who could actively trade the stock were those who worked for large financial institutions, brokerage firms, and trading houses. The advent of online commerce coupled with the instantaneous spread of news has leveled the playing field, or should we say commerce. Easy-to-use trading apps and 0% commissions from services like Robinhood, TD Ameritrade, and Charles Schwab have made it easier than ever for retail investors to try trading like the pros. Day trading can become a lucrative career, but it can be difficult for newbies, especially those who don't have a well-planned strategy. And keep in mind that even the most experienced day traders can go through tough times and suffer losses. So, what exactly is day trading and how does it work? The basics of day trading. Day trading means buying and selling many stocks in one day or even seconds. It has nothing to do with investing in the traditional sense. You are taking advantage of the inevitable up and down price movements that occur during a trading session. Day trading is most common in the stock market and the foreign exchange or forex market where currencies are traded. Day traders are generally well educated in the minutiae of trading and tend to be well funded. Many of them add an extra layer of risk by using leverage to increase the size of their holdings. Day traders are attuned to events that cause short-term market movements. News-based trading is a popular technique. Scheduled announcements such as the release of economic statistics, corporate earnings, or interest rate announcements are subject to market psychology and expectations. That is, markets react when those expectations are not met or exceeded, usually with sudden, large moves that can greatly benefit day traders. How does a day trader get started? Professional day traders, those who trade for work and not as a hobby, are generally well established in the industry. They also typically have a thorough understanding of the market. These are some of the prerequisites needed to be a successful day trader. Knowledge and experience in the marketplace. People who try to day trade without understanding market fundamentals often lose money. A good start is a working knowledge of technical analysis and chart reading. But without a thorough understanding of the market and its unique risks, charts can be misleading. Do your due diligence and understand the particular details of the products you trade. Sufficient capital. Wise day traders only use venture capital they can afford to lose. This protects them from financial ruin and helps them take the emotion out of their business decisions. Often, a large amount of capital is required to effectively capitalize on intraday price movements, which can be in cents or fractions of a cent. Adequate liquidity is required for day traders intending to leverage margin accounts. Volatile market changes can trigger large margin calls on short notice. Day trading strategies. A trader must have an edge over the rest of the market. Day traders use any of a number of strategies including forex trading, arbitrage, and trading news. They refine these strategies until they produce consistent profits and limit losses. There are also some basic day trading rules to follow. Choose your trading options wisely. Plan your entry and exit points in advance and stick to the plan. Identify patterns in the businesses of your choices early. Discipline. Many day traders end up losing money because they are unable to place trades that meet their criteria. As the saying goes, plan the operation and negotiate the plan. Success is impossible without discipline. To make a profit, day traders rely heavily on market volatility. A day trader may find a stock attractive if it moves a lot throughout the day. This could happen for a variety of different reasons, including an earnings report, investor sentiment, or even general business or economic news. Day traders also like high liquidity stocks because it gives them the opportunity to charge their position without affecting the stock price. If the price of a stock rises, traders can take a long position. If the price falls, a trader may decide to go short in order to profit when it falls. Regardless of the technique a day trader uses, they typically try to trade a stock that is moving a lot. Who makes a living by day trading? There are two main divisions of professional day traders, those who work alone and/or those who work for a larger institution. Most day traders who trade for a living work for big players such as hedge funds and the trading desks for banks and financial institutions. These traders have an advantage because they have access to resources such as direct lines with counterparties, a trading desk, large amounts of capital and leverage, and expensive analytical software. These traders generally seek easy profits from news and arbitrage opportunities. Their assets allow them to capitalize on these less risky day trades before individual traders can react. The solo day traders. Individual traders often handle other people's money or simply trade their own. Few have access to a trading desk but often have strong ties to a brokerage firm due to the large amounts they spend on fees and access to other resources. However, the limited scope of these assets prevents them from competing directly with institutional day traders. Instead, they are forced to take more risks. Individual traders typically day trade using technical analysis and swing trading, combined with some leverage to generate adequate profits on small price movements in highly liquid stocks. Day trading requires access to some of the most complex financial instruments and services on the market. Access to a trading desk. This is usually reserved for traders who work for larger institutions or those who manage large amounts of money. The trading desk provides these traders with instant order execution, which is crucial. For example, when a takeover is announced, day traders seeking merger arbitrage can place their orders before the rest of the market can take advantage of the price spread. Multiple news sources. The news offers the most opportunities. It's imperative that you be the first to know when something significant happens. The typical trading floor has access to all the major news outlets, constant coverage from news organizations, and software that constantly scans news sources for big stories. For the average investor, day trading can be a daunting proposition due to the magnitude of the risk involved. The United States Securities and Exchange Commission, or SEC, highlights some of the risks of day trading, summarized here. Be prepared to suffer major financial losses. Day traders often experience major financial losses in the first few months of trading, and many never make a profit. Number 2, day trading is an extremely stressful full-time job. Watching dozens of quotes and price fluctuations to spot fleeting market trends requires great concentration. Number 3, day traders rely heavily on borrowing money. Day trading strategies use the leverage of borrowed money to make a profit. Many day traders not only lose all of their money but end up in debt. Number 4, don't believe easy profit claims. Beware of expert advice, newsletters, and websites that cater to day traders, and remember that educational day trading seminars and lectures may not be objective. Should you start day trading? If you're determined to start day trading, then be prepared to commit the following steps. Number 1, make sure you come in with some knowledge of the trading world and a good idea of your risk tolerance, capital, and goals. Number 2, be prepared to spend some time practicing and refining your strategies. Number 3, start small. Focus on a few actions instead of exhausting yourself. Going all out will complicate your trading strategy and can mean big losses. Number 4, remain calm and try to keep emotions out of your exchanges. Don't deviate from your plan. By following these simple guidelines, you could be well on your way to a sustainable day trading career. Let us know in the comments section, alright? That's it for today's video. If you like watching our content, please consider subscribing to our channel by clicking the subscribe button down below. Thanks for watching!